Hey traders, welcome back. Today, we're going to put our skills to the test with two short trades in one day. Whether you're a seasoned pro or just starting out, these trades will show you how to adapt to changing market conditions and make the most of every opportunity. Today, around 11:40 a.m. and 12:50 p.m. Eastern, I ended up taking two short trades in Nasdaq futures. I'm going to walk you through the exact trades, why I took the trade, where my risk and reward was, how many contracts I took. All of those good details will be in today's video. Let's go to the charts. As you can see, Nasdaq has been in an uptrend since morning, but we're seeing some signs of overbought conditions. Lots of volatility today, but I'm also trading a higher contract size. 3 is definitely over my usual contract size. I just was really confident on this setup, so I was willing to go a little bit heavier on this setup. Now let's execute our short trade. Remember to always use proper risk management techniques when trading with leverage. I'm looking for a target of 19,670 or more. So let's see if we can get there now. Obviously, I'm shooting for lower than 19,670, but that's just my first area of interest. Since market opened at 9:30 a.m., Nasdaq kept going up. I waited patiently for it to reach this resistance level, plus big number zone of 19,700. The 19,700 level is a significant psychological barrier for many traders. After the heavy resistance zone was reached, which helped confirm my trading decision, I waited for the price to show me some kind of weakness or exhaustion in the market before taking a short position and avoid entering into the trade during a period of strong upward momentum. I placed my stop limit order below the consolidation low. You may ask why stop limit order and not limit order. By using a stop limit order, you're able to set a price level that will trigger a sell order if the market reaches that level, but also give the market some room to breathe before entering. This can help reduce whipsaws and false signals. My stop limit order got triggered and we entered into the trade. The price started going in my favor. That's when I moved my take profit target lower to the previous day high level. Moving profit target to the previous day's high is a great way to maximize your gains while still managing risk. By doing so, you're essentially saying, let's take a look at how this trade plays out in the next few minutes. As you can see, the price starts to go lower towards my profit target due to sell pressure. So after the trade was adjusted to the previous day's high, the price retraced a bit and then accelerated back in my favor. That is when I decided to move my take profit further down to the big number area, anticipating a quick flush down. But then the price started retracing against my direction. That is when I decided to move back my take profit to its original place.
Target filled.
And now, with the price hitting my profit target, I have been able to lock in the gains of $2,133. It's always a good feeling when you're able to ride out a trade and come out ahead. Now, I would like to talk about my next trade and the strategy I used in that trade. In this second trade, I waited for the price to reach my trendline zone and used trendline zone as a trigger to enter the trade. And when the price pierced the big number of 19,800, which is indeed 100 points above my previous trade, that's what triggered the short entry. This white trend line was drawn from a higher time frame chart. By entering a short trade with 2 contracts, I was taking advantage of my confidence in the trend line resistance and the market's potential direction. I was being strategic about my position sizing and risk management. As soon as I entered the trade, the price started going against me. When the price starts going against you immediately after entering a short trade, it can be a sign that there's more buying pressure than selling pressure at play. When the price hit the trend line resistance, it started to retrace, but then it started to go against me again. By waiting for the price to touch the trend line again, I gave myself an extra confirmation that the trade would be going in my favor. I had a strong conviction about the trend line's resistance strength since it was drawn from a higher time frame chart and the market's potential to move in my favor. Additionally, with the profits from my previous trade, I was feeling more confident and comfortable with staying in this trade. As a scalper and fast-paced day trader, I am looking to take advantage of small-time price movements and make quick profits. My strategy is to enter and exit trades rapidly, often in a matter of minutes or seconds. Hitting the trend line for the third time was like hitting a brick wall for buyers, and the price was not able to go up anymore. That confirmed my conviction about the trade's direction. Remember to always stay adaptable and adjust your strategies according to market conditions. And then when the price flushed down and hit my profit target, that was an exhilarating moment. It's always satisfying to see a trade come together after some uncertainty. That's it for today's trades, folks. We made 2 successful short trades in about 1 hour and 10 minutes of trading, netting us around $2,525 in total. Thanks for watching. Don't forget to like, comment, and subscribe for more futures trading insights and strategies.